This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, now take a look at the gold market. As I said in the research, the Forex markets, financial markets probably will get some relief from the geopolitical tensions since the Putin and yesterday's press conference that was dedicated to the Crimea voting referendum has said that Russia has no intention of the further invasion in Ukraine if Ukraine government will protect the citizens from the separatical tensions that now is dominating in Ukraine. There will be no necessity of the presence of the Russia's forces on the Ukraine territory, and that the Russian government has no intention to for any separation of the Ukraine, and it stands for unite country for the single country as the Ukraine. That probably will get some relief, will bring some relief to the markets, at least in the nearest couple of sessions. The FOMC meeting will be the major event. What do we see on the gold market? On the gold market, we see the further downward action that we have discussed yesterday, and we said that the first target will be stand at the previous tops. If market will pass through it, that will be the first step, the first challenge on the possible deeper retracement to the downside. Because right here, around this neckline, stands the target of this engulfing pattern. So if you will measure the distance, the length of the bars of the engulfing pattern counted to the downside, you will get precisely the area around the neckline. And returning back below the previous tops will be, as I said, the first bell of the possible further retracement, and we will hope that markets finally will get us the nice chance, nice dip for long entry on the long side of the market. Here, guys, I also have drawn the Thomas D. Mark, the framework for estimating the possible target of the trend line breakout. So if it will happen, the Thomas D. Mark tells in its work that the reaction is equals to the counter-reaction. So you need to calculate the acceleration of the price above the trend line, and if the breakout will follow, you should count to the downside the same distance as here to estimate the possible deep acceleration to the downside. That distance points on an area around the monthly pivot point. That, take a look, guys, haven't been tested yet. That is the monthly pivot point. Conversely, the monthly pivot resistance one has been tested, as well as the yearly pivot point around 30 and 60. Now market has returned right back below it. So retracement really could be significant here, especially if market will take out of these lows. If this will happen, we will be probably we could pretend on some ABCD action to the downside. I can't exclude this possibility. Also, guys, take a look that here will be the market oversold. We have also the bearish divergence right with this area. So in general, the short-term setup on the gold market is bearish, because trend here is also, as you can see, bearish. Market today, probably market should reach this support area and somehow responds on this level. So if you take a look at the 4-hour time frame chart, that's the picture that we have discussed yesterday. This market has moved below the weekly pivot point. Unfortunately, it hasn't given us any chances to take the scalp short position with the further continuation. Instead of that, it has tested this previous tops, bounce up, and move right below it. You can see the next target will be the crossing of the trend support that we have discussed on the daily time frame chart. And take a look, weekly pivot support one. That will be the first area where a market could show some minor bounce to the upside, maybe to some fib level of that move down. This also is confirming by the pattern that is now forming on the hourly time frame chart. So if you'll take a look at the hourly time frame chart, you'll see the couple of patterns. First pattern is the bearish dynamic pressure, because you can see that market is showing downward action, but trend by the MACD indicator shows stands bullish. Only now it started to shift to the bearish. When you see such price action, it tells us that market has a bit hidden bearish power that usually leads to taking out of these lows at minimum. And as you can see, guys, now the market is forming the bearish butterfly that has the target 1618 extension at 1343 approximately, right around the weekly pivot support one. So in nearest future, market probably will lead this level, and only after that could show some retracement to some fib level of probably this move down, of the whole thrust down. So that will be the first object to see as the potential target. So if it has happened that you somehow now hold the bearish position, then you could try to hold it till market will hit this level. And after that, when it will happen, market will reach this area. After that, guys, we will be searching for a possibility to take the short position if we will get some reasonable bounce to the upside as a result of the appearing of this butterfly and the hitting of the support area. We will see what will happen tomorrow, because today there's really significant volatility could appear as a reaction on the FOMC statement. So we'll see. But in the short-term perspective, I think that market should reach 1340 area, this support, and somehow response on this support, especially if you take into consideration this butterfly that's now is growing, is forming on this on the hourly time frame chart.